All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market has opened with some incredibly light volume this morning, and we have some stuff up a little bit, some stuff down a little bit, kind of same old, that we have seen in the market, and some of the stuff that was up yesterday pulling back today, and vice versa. It's just, that's just the way the market has been, this entire month. But today, this morning, the volumes are very light. It is a very light volume morning, and to be expected, right? All eyes are on the Fed here today, and rightfully so. And it's one where what the Fed does, is it critical from an economic standpoint? I don't think so. Is it important from an investor psyche standpoint? I do, and I don't think it matters whether they cut rates by zero point 0.5 or 0.25. I think it comes down to what is their rhetoric about going forward, and are they going to stay on this loose path? Or are they just kind of going to say, hey, you know what, this is a token cut, and you know what, we're going to hold and wait for more data. And I think if it's a token cut and they hold and wait for more data, the market may have a little temper tantrum. If they basically say, hey, you know what, we have this path of cutting, planned out for the rest of the year, then it'll be kind of a market surge here with that. But I understand the media and all of that. They go out and it's always the Fed going to cut, and is the Fed going to cut? And you look at the questions asked to me, it's always, is the Fed going to cut? Well, yes, the Fed's going to cut, right? They've said that they're going to cut, and it's one where I'm just looking at the challenge right here, see if we have to do anything. We don't, so I'll come back and adjust the challenge here a little bit later. But let's go take a look at this CME FedWatch tool. You've seen me show this before. But this FedWatch tool from the CME, and you can just Google search FedWatch CME, it is a really good tool to understand where the market mentality is, right? And I it's very different from turning on the TV. This is real money in play. This is actual money. This is not opinion. This is not analyst. This is actual money in play, and it's mostly the bigger money. And you can see almost 80% expectation or probability of a Fed rate cut of 0.25. 20% for a Fed rate cut of 0.5. Now, this has changed a little bit since yesterday. You can see yesterday it was 23 and 77. You can see a week ago, 23 and 77. You can see a month ago it was 32 and 67, right? Where 67% chance of a 0.25 rate cut, market was 5 rate cut was 32% chance. You'll notice that there's no, hey, Fed's going to leave it the same priced in here. So if the Fed doesn't cut rates, how much reaction does there have to be from the market? There has to be a lot. If the Fed cuts by 0.5, what type of reaction does the market need? It needs a bigger reaction, right? Because most is priced for this, just 0.25 cut. Now, one thing to know about the Fed historically is that they do what the market expects. They create the market expectation ahead of the rate hike or the rate cut, and they do what the market expects. But most of the time when we go into Fed meetings, there's not this big of a, or there's not, there's a more of an overwhelming consensus than what we see right now. And so I mentioned in my note this morning, I do think we could see a little more of a reactive market, today and into tomorrow, right? Just simply because we don't have as much of a consensus. Now, if you take a look at September and what the market's expecting, right, you can see that there's a 32% chance, or the market's kind of pricing in 32% chance that the Fed kind of, cuts today and doesn't do anything in September. 50% they cut today and they cut in September, and 12% that they cut today and they cut again in September. One of those is going to be 0.5. So we do have, a very mix. We have quite a mix here for September as far as where things are going to go. And, that's why I say, hey, you know what? The Fed path and what the Fed outlines for going forward, it's going to require some market adjustment. It's going to require some money in, money out type of situations here. And that's what we can see, from this. If we were to log into this and we say, hey, 99% probability the Fed cuts 0.25, the Fed will cut. It's going to be a yawn snooze event. And if September it was, 85% of, another 0.25, and that's what the Fed does, it would just be a yawn snooze event. But this event going in, there's a lot more uncertainty priced into, what's the Fed going to ultimately do here. And we can see this in this FedWatch tool and, kind of where that stands, all right? I understand these types of events. They create a lot of anxiety, amongst traders. And, you start getting into this, well, how much exposure do I have? What's my risk? Am I going to be right? And, really deciding whether the Fed's going to cut rates or not. That doesn't help to make any kind of decisions, right? Because, well, yeah, they're going to cut rates, right? But then how's the market going to react? Well, it's going to react based on some of the sentiments and stuff there. So it's just one of those where, you've never seen me get caught up in the game of prediction, in terms around the Fed. But when I look at how the market is positioned ahead of the Fed, we can see whether it's more likely to be a more heavier reaction or a lighter reaction. And as things sit, I do expect a little heavier reaction. It is summertime, though, and summertime reactions are muted. And, I understand there's a feeling out there that this market is all over the place. But, let's face it, the market has just been incredibly flat, right? It just incredibly flat. Just really has not done a darn thing, here. And, that's been the way of the last, 3.5 weeks. Right. And, is the Fed going to be a catalyst to change that? Yeah, I think they will. I think they will. But I would not be surprised to see a big upside reaction followed by some heavy sell. And I would not be surprised to see a big downside reaction followed by some heavy buy. One thing we do know about Fed reactions is the initial reaction is not, always the way that, the way that things go there. For it. Okay. So anyway, that's the FedWatch tool. We've had earnings, more earnings coming in. We've had Apple, we've had AMD, and many others, come on in. I've not had a chance to go through more than just the headlines and some of the headline commentary of both stocks, but I'll be doing that here as the day progresses. Overall, from what I saw with Apple, I don't think anything's really changing. I think the story is about the same, and it's one that is, ultimately long-term bullish, and one where, they're an absolute cash cow. They're an absolute cash cow there when it comes to Apple. Now, for the challenge, have two positions on the board. There are no new signals here this morning. We have Halliburton with a 3-7 crossover. It had a nice reversal yesterday, but it's not triggering here this morning. Some of those things like FCX had downside 3-7 crossovers yesterday morning, but didn't materialize into the close. They're having them here this morning. We do have Honeywell with a downside 3-7 crossover on it. It's not triggering bearish here with it, but I'm still in a position on Honeywell. Let's go take a look at the option pricing. Valero is 288 and Honeywell is 205, so 288 and 205 here. Was not a pretty close for Honeywell yesterday, but then just kind of a stale open this morning, and not a lot of volume, but just kind of nothing, just nothing to kind of break out of this, just dank consolidation that it's in here so far. But the stop levels were not coming in on the time stops here. Time stop is tomorrow afternoon. But we do have to be aware of the price stop there. We are about $1 away there on that. Down about what 23% on our option. So it's something that we'll have to keep an eye on here today. And if something happens there, we'll definitely have to react this afternoon. Valero, just we entered it yesterday afternoon. Nothing going on with it here so far. It's been pretty tight ranged here this morning, at least so far. And if you've never traded Valero, you probably look at it and go, man, this thing's all over the place this morning. But for Valero, this morning's been pretty darn calm overall. Okay. All right, so that's where things sit. Going to run into this is what I'm going to hold over the Fed. Remember, it's not the Fed that's driving any of these decisions. Just simply running with the algorithm, and we'll continue to do so. It's one of those we may look at things this afternoon, and things are real nice gains. We may look at things this afternoon, have to back out of Valero and Honeywell, but it is one of those things where it's the process, right? It's a process, not an event, and I will continue to run with the process and look to survive the chop and thrive when we start to push into some nice trend. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.